All right, here we go with this next video. So on this video, we're going to talk about 7 places for you to go and get money if you have bad credit. This is very important because I have a lot of clients that I deal with that honestly, they just don't, their credit's crap. So in the process of getting their credit right and all that good stuff, they need to get some money so that they can, start building their business and just start functioning. And so what we've done is comprise a list for 2022 of places they can go to, places you can go to, and start getting some credit, which is also going to start helping you build out your personal credit file. So this is for personal credit. It's actually really important. So I always tell people this. You don't necessarily want to start off with, big loan amounts. What you really want to do is kind of be smart about it and go after loan amounts that are, far less than what you need initially. So that way you're able to pay it off much faster. So let's say if you take out a loan and the loan is, I don't know, I'm just going to say $1,000 and it's, something you can pay off in a year or, 15 months or whatever the case may be. The deal is, it's going to be a high interest rate loan. So what you're going to want to do, in my opinion, is you're going to want to get a loan that you can definitely afford because it's going to help you build out your credit. And that's what's most important. These high interest rate loans are not for you to go out and do a bunch of real serious dealings with. They're all about you building your credit profile so that way you're able to do bigger things faster. So for instance, if you were using that example of $1,000 loan or a $5,000 loan, I don't know what your particular situation is, but if you have a good income but crappy credit, get a $5,000 loan. I really don't care. It's kind of like your thing. You have to know what's good for you. So let's say if you can afford a $100 payment, then that's the type of loan that you should get. If you can easily afford to pay $300 a month, then you should get a $100 a month payment. If you can afford to pay $1,000 a month, then you should get like a $400 payment max. Because what you're going to do is you're going to pay $1,000 a month on that loan until it gets paid off. So whatever the loan amount is, you always want to be able to pay 2 times more, at minimum double what your loan amount is, your payment amount is every month. Extremely important. We always want to be as smart about this as possible. And what's going to end up happening is as you're doing that, as you're paying down these loans, and you're going to pay them down early, you're going to pay them down way early. You're going to pay your payment early because there's a little known thing, and when it comes to credit, is that you get an extra points, if you will, within the systems, whether it be Experian, Equifax, TransUnion, FICO.com, whatever. You get extra credit, so to speak, when you pay early. So if your payment is due on the I don't know, let's say the 15th of the month, and you're paying every month by the 5th, and you're doubling up your payments, tripling up your payments, it's a good look for you, and it's going to help improve your credit score much, much faster. So let's go through this, and not fast, but we're going to go through some of these. Some of them we've dealt with in the past, others we have not, and I'll let you know which ones are which. So let's move on. So Best Egg. I've had people that have dealt with Best Egg, and it's just like with anything else, some with good results, some with no results, right? So Best Egg is just like any of the others. The thing about Best Egg is one of the bigger ones out there that deal with people that don't necessarily have the best credit. So you might want to consider trying them out. If you stick to the end of this, I'm going to tell you guys a little secret that I think is going to help you in the process of applying for credit. So Best Egg is a good option to start with. And so Best Egg, their interest rate starts off at 5.99%. Their loan amounts start off at $2,000 all the way up to $50,000. Obviously, to get that low interest rate of 5.99%, your credit's going to have to be better than the 660 FICO score that they're looking for. You're going to have to be better than the 660. So their starting point though is 5.99. If your credit's not the greatest, just know that you're going to pay much higher than a 5.99. And always remember that their loans start at 2,000 and run up to 50,000. So that's best egg. Let's rock to the next one. Payoff. I don't know jack about payoff, but I do know, as you can clearly see, payoff, they start off at 5.99. But once again, with all of these companies, if your credit is not the best, these teaser rates, that's all it is just to, kind of lure you in the door. But you'll probably end up paying a much higher rate than that. And remember what we're trying to do. We're just trying to get a loan so we can help. If you got to, use it for your business or to make more money, that's a good look. But if you're just trying to, use it to spend on some miscellaneous stuff, you shouldn't get it at all, in my opinion. You got to do what you think is best for you. So as it says right here, personal loans between 5,000 and 40,000. 2 to 5 years to pay off. Once again, you're always looking to try to pay it off sooner. Whatever the loan amount is, the loan amount needs to be such that you can afford to make that payment come hell or high water 2 to 3 times whatever the payment amount is every month. So let's move on to the next one. Now, Lending Club. I personally have had experience with Lending Club, and they did not approve me. And they didn't approve me probably because, being self-employed and the way my taxes look, I have really no idea. I get approvals from other places, no problem, but Lending Club, with me, they turned me down, but a bunch of other people I know, they gave them money. So the way Lending Club works is it literally they get in money from investors, and then they will give out money as per their requirements, and in some cases as per the investors' requirements. All right, so that's my understanding of how Lending Club works. So realistically, Lending Club, if you had a bunch of money and you wanted to lend it out in a relatively secure manner, you could go into Lending Club and become an investor. As it states really clear right here, you can be an investor and make money on your money. So they're going to take a percentage of it for handling the loans, but you on the other side of it would be able to make a good rate, especially on these higher rate loans. So Lending Club, they go from 7% all the way up to 35%. So if you think about it in these terms, if you were you lent out, I don't know, 3, 4, 5, 6,000, I don't know, $10,000 or something, and the rate of interest that you're getting, the APR, it's the gross, right? It's 35%, and you get a chunk of that 35%, 10% of it even. That's way more than you would ever make putting your money in the bank. And so I will tell you there's risk involved in that. But if you're a borrower for, what we're talking about here, with Lending Club, you're going to pay, once again, that up to 35%. And then you're also going to be able to get somewhere between $1,000 and $40,000. Their loans tend to max out at $40,000. Once again, for me, it didn't work out. But I was also going through not just their regular process, but it was one of the SBA loans that whatever one, I forgot which one it was, and they didn't approve me, but we reapplied and were able to get it through another lender, no problem. So I don't know what the deal was with Lending Club, but we've had a lot of other people use Lending Club, not only through the COVID-19 stuff, loans and all that, but just in general, and they've done good with Lending Club. So we're going to move on to the next one. So this one is Prosper. Same thing with Prosper. I have not personally applied with Prosper, but we've had clients that have applied with Prosper and they've done okay. So Prosper they start off at 7.95% and they run all the way up to 35.99%. Interest rate, really high interest rate, but it is what it is. It's a place to go and get what you need right here, right now. It's not a place to go to if you have, excellent credit. Not in my opinion. There's other places, and we'll create a list for that you should go to if you have good credit. There's a couple of places I'll mention to you in the next video, which is going to be about if you have good credit, where you should go. But right here, right now, Prosper is a good look. You can definitely get money from Prosper. If your credit is not just terrible, just know that you're going to pay a high interest rate. And with Prosper, it's 2 to 40,000, and they start off with a 560 credit score. So let's move on. So once again, here's the next one, Lending Point. I have no clue. I don't know anything about Lending Point other than what I have heard and a little bit of research that we've done. Lending Point, they start off very high, which is 15.49%, and they go all the way up to 34.99% for interest. And as you can see clearly, their loans are from $2,000 all the way up to $36,500. So once again, if your credit's not the best, you can possibly check out Lending Point and see what they can do for you. The next one, Avant. Avant, once again, we've had people go through Avant. Some have done well, some have not done so well. Avant, in my opinion, is I don't know. They're good for really not the best credit. You can see they even have a program. Start building your credit score with clear and transparent $300 and $1,000 credit limits. So they even offer you a program, right up front, where if your credit's just absolute crap, they have a $300 to $1,000 program. That might be good for a lot of you just to get some stuff built up, so you can have some stuff showing that's positive on your credit file. But they also have loan amounts that go from $2,000 to $35,000. You obviously, for them, you have to have a credit score of 550 or better, 550 or better. And once again, their rates are crazy high, 27.95 all the way up to 35.99. But for bad credit, it's a good place to get your start. The next one is Stilt. Now, Stilt, I don't know anything about, to be honest with you, but we added Stilt to the list because Stilt, according to their, all their information, they don't have a specific FICO score that they're looking for. So I think that they're looking for what you can prove as far as job readiness, right? So do you have an income that they can go after? That's what Stilt seems to be looking for, which for a lot of you, it can be a good look. Stilt starts off at 7.99% interest all the way up to 35.99% interest. They do $1,000 to $35,000 loans. Once again, no credit, no minimum credit. You're going to have to check them out for yourself because I don't know anything about Stilt. And we're going to add one more to this list. I know this is a list of 7, but we found one more like Stilt, which is called Net Credit. They also seemingly don't have a specific credit score that they go after, but Net Credit they start at 34%, 34.99, I believe, and they have loans from $1,000 to $10,000. Just know that you're going to, pay a high rate of interest. But for a lot of you, it's all about building your credit file. And if you have the income, then I would check out one of these companies, Stilt or Net Credit, which is what we're on right now. So that's it. I'm going to do a quick rundown again. Best egg, it's at the top of the list. It's 5.99%, 2,000 to 50,000, and you need a 660 FICO score. Payoff is 5.99% and up. 5,000 to $35,000 the loan amounts, and you need a 600 FICO score. And then there's Lending Club, 7.04% to 35.99%, 1,000 to $40,000 loans, and 600 FICO score is required to even apply. Prosper is 7.95% to 35.99%. 2,000 to 40,000 is their loan categories, or what they, their loan amounts. You need a 560 FICO score. Lending Point, it's 15.49% up to 34.99%. Their loan amounts are between 2,000 and 25,000. You need a 580 FICO score. Avant is they're at the higher end of things. Avant is 27.95% to 35.99%. $2,000 to $35,000 loan amounts, 550 FICO score. And then we get down to Stilt, which starts off at 7.99% to 35.99%. 1,000 to 35,000, no apparent credit score needed. And then the next one is Next Credit, 34%, 1,000 to $10,000, apparently no credit score needed. All right, and that's it. And hopefully you guys got some good info out of this video. We're here to help you out. Please like this video, subscribe to the channel, and that's it. That's all. Oh, by the way, if you need business or personal coaching, here's our number. Give us a call. Thank you very much.